This is brutal power wrapped in an elegant machine.
The next part of setting up Prism for finance is, and the automated rule creation is in the procedures, transport, farrier, dentist and other. So what this does is it allows you to allocate costs based on task orientated requests that have happened within the Prism system. So if you request a treatment to be given to a horse, if that treatment has a rule against it, then the expense will be automatically charged as well. So to show you how that works, we'll go add. You basically select a supplier. Again, it can be internal if you don't have a supplier, or it can be all suppliers, or you can select obviously what you want or who you want. So we're going to do a procedure rule here. We're going to create butte. We're going to say 10 mil, and it's going to be charged out at $12.50. The receivable account will be vet recoverable, and the tax rate's there based on what we set. So if we go save, so that rule now, if I go into my add anywhere button and I want to create a procedure against a horse, I'll select the horse. I'll select the category. I can select the category here, go boost, butte. Select the amount and the method, and if I create that, it'll charge out, or I can select it from this drop down here. Select it, yes, choose, and then it creates that. So that's sitting there. So whoever it's assigned to, the vet, the foreman, it's sitting there, and once it actually gets completed, so say it was done, that line item will then go into your finance account. Here under procedure, 10 mil, $12.50. So what it's doing is it's just allowing you to capture every single thing that happens in the stable. Likewise with rules, so if we go transport and we want to create a rule, and say we need to add a supplier here, so this could be demo float. Save that. We're now creating a supplier rule. Now the thing with these is, if you have a good relationship with your supplier, and you know that every time you do something with them they'll charge you a fixed rate, what it allows you to do is to create not only your recoverable amounts over the course of the month or the billing period, it also allows you to create your purchasing and your bill amount, so you know what you're spending with each supplier as you go along. Now you don't have to do it this way. Again, I'd encourage you to talk to your financial advisor about what the best way is. Every stable is different. Every stable knows what their relationship is with the supplier. Some of this will work, some of this won't. But if you do have a relationship with a supplier that everything that you do is the same cost, then you can certainly add this part in. So this is, we'll be saying a movement from Eagle Farm to Seven Oaks. Let's call it $100, and the payable account will be flow. So we add a new one. Let's call it floating expense. Again, all these accounts and everything would be set up by your financial advisor. So there's a $100 charge on that. If you want to charge extra, so if you want to charge 10% extra, you can. And what it does is it creates that amount down here. You then need to add in floating recoverable. So what that's doing now is saying if you complete this task, there'll be $100 put to that expense account, as well as 110 put to the recoverable account in Xero. So again, this is really about each, making sure that you set it up properly with your financial advisor, because it will determine how and where we direct these costs. So if we say, for example, we now create a movement, and we want to do it for a horse that did, let's say, Lady Chicago. So Placani, we want to tip Placani out, send it to Eagle to Seven Oaks. We could do it this way, or we can simply put in Seven Oaks adjusting, and then if you want to do a return, adjust location, and then you select the supplier, demo float. Now if you actually just click this, and that would all be pre-populated, but you can either do it manually or via a rule via the supplier. If you go create, that's now created a movement of that horse from Eagle Farm to Seven Oaks. I'll just make an adjustment. So say we did it on the 10th. So you can see that's in there now. If we mark that as complete on the 10th, what this is telling us is that it will also change the location and status of Placani to Seven Oaks adjustment, which will then attract a new day rate. So if I go to Placani, I can see now that the location and status has changed. So the horse has been tipped out. You can see that it's changed there, and you should see in here that there's a floating charge for the $100 that we changed, and then you'll also see the change in the day rate. So if you filter by the horse, you can see that up until the 10th, Placani was being charged out at a full training rate. It then had the floating charge and was tipped out, and so it's now being charged out at the adjusting rate, which you can see there. So again, it comes back to basically one, setting the rules up properly, and then the whole thing will just flow automatically as you go about your daily business.